Building Blocks 2025 in Tel Aviv. The future of tech.
Hello, everyone. We hope to make this interesting. This is a fireside chat, so we hope to combine here some interesting aspects about building something so cool and unique that really exploded in the past 2 years as EtherFi. And I would love to start it, Mike, with something that you tweeted recently. So you tweeted that being a founder is kind of a mental illness where you hear 5% success rate and you are excited about that. And with EtherFi, you chose to bet on Ethereum and the Ethereum ecosystem with this 5%. What make you wanting to do that and still staying bullish about that?
Well, first of all, one day I hope to have one of these fireside chats and there actually be a fire. I feel like every time it's a rug pull, call it a fireside chat, but it's just a bunch of guys on a stage. Yeah, I mean, I wouldn't put. I mean, we've taken a lot of gambles as EtherFi. Betting on Ethereum was not like a hard decision. I mean, even today you can say, okay, Solana's having or had a moment. But Ethereum is so far ahead as far as actual economic activity that's not a hard bet. I think a much harder bet was betting that we could do something interesting in staking, right? Because, when we started, Lido had, like 98% market share on liquid staking. They were by far the largest project. We had this, I saw some videos by this crazy guy named Sriram talking about restaking. And I thought, hey, there's an opportunity here to re-platform the largest category in DeFi. And I felt that, Lido had become kind of rich and fat and like comfortable, and so we would have a shot at that. So I think that was the real 5% bet we were crazy enough to believe.
Yeah, I feel like I was inspired in our early days in a very similar way by meeting Sriram and getting this feeling that I haven't seen something like that in crypto for quite a while. Sriram have this way of conveying a message in a way that gets you very excited about topics that might be very boring without this way of explanation. Since that point, EtherFi became one of the biggest protocols in DeFi. Second to Lido at this point by TVL, right?
In staking, yes. Overall TVL, I think we're fourth or fifth. Depends on the price of ETH on any given day. We at the height when ETH was like at 4,000 or so, we were over 10 billion. Now we're at 6-ish. Again, depends on the price of ETH.
But that's in USD terms. At the same time, in ETH terms, you are still growing this entire time.
We are, yeah. We had over 200K, over 400 million ETH, $400 million in deposits just in the last 2 weeks. So yeah, we're continuing to grow. We're pretty proud of that. I mean, I can talk about why I think that is, but yeah, we've actually continued to grow.
While your competition is also growing at the same time, we work with such a large group of different LRTs, and we are still in awe in the fact that you are able to distinguish yourself, distinguish EtherFi in a way that people still trusted more than anything else. While we all know that crypto work in this interesting way where things that don't have a token yet tend to have so much ammunition by anticipation for some kind of magical incentive that just around the corner. So you're able to do it post-token launch and continue this growth. Maybe you can say a few words about why that's happening.
Yeah, I mean, everyone else in the restaking space has declined pretty dramatically, actually. I mean, I guess I'm just making a factual statement, whereas we've continued to grow. I think there's a couple of reasons for that. There's definitely things that were not responsive, I guess not, it can't entirely take credit for. When you get to a certain size, especially in this sort of restaking LRT space, naturally, you just tend to attract more because this is the same reason that Lido, I think, ended up just being so dominant. Once you get big, it like just you know everybody by default chooses the biggest one. So your life becomes easier, and so you know we can maybe take credit for how we got here, but the continued growth, I think we get some of that for free, which is nice. But we also, I mean, we've launched new products, and our vision really from the very beginning went way beyond staking. I mean, I think staking alone is just kind of a shit business. You know, it's low margin, like really not a lot of differentiation, right? Like one staking versus or one restaking thing versus another. It's hard to differentiate. You know, you're making, I don't know, 20 basis points on the deposits. Like, it's not a great business. Even today, Lido it has, you know, huge TVL, but it's somehow incomprehensibly losing money. There's probably other reasons for that, but it just shows that, like, even if you've got whatever it is, you know, 18, 20 billion and whatever the number is, 20 billion in TVL, it's still like the margins are thin. So from the very beginning, we knew that we needed to go beyond staking. Staking was really just a way to bootstrap TVL and customers for us. Our longer-term vision, with staking being sort of the first step, is really to create a fully vertically integrated suite of financial products that together create a crypto-native neobank. So like a full end-to-end product suite that lets you save, invest, and spend. And today, what that looks like is our three products: EtherFi Stake, EtherFi Liquid, and EtherFi Cash, which allow you to save, invest, and spend your money. So the end game for us that will sort of materialize really in the next month or so is just a single app, like a nice mobile app that to the average user looks and feels very much like a Revolut or Nubank, and allows you to do all the normal things that you'd expect from a traditional financial institution, but on crypto native rails with lower fees and self-custody, higher rewards, and all the other great things.
So we were just talking before we went up on stage on the fact that we are going to all of these conferences around the world and talking to people and talking to a lot of these institutions and really getting a feel, a different, kind of like a different feel of the market than what you would read on X. If you are not going to these conferences, and let's say that you don't work in the industry, but you are very connected and like you consider yourself as a crypto person. Recently, you tweeted, "Timeline is so bearish that I'm starting to feel bullish again." How disconnected do you feel is reality from timeline on X, from crypto Twitter?
I think it's called the gambler's fallacy, maybe, or there's certainly I should know this, psychological phenomenon where people look at random events and they think like they like to internalize the causes, right? Like you play roulette and you think like, if I only had chosen red, I would be, I'd be rich now. I think that's a little bit of what's happening here. The reason prices are down is almost entirely driven by macro phenomena. Like there's a trade war, there's real wars, there's like stuff going on that is pulling down the Nasdaq, the S&P, like all like speculative assets are down. So the reason ETH price is down is just like that's the reason, right? Like we like to again think like, oh, it's because ETH hasn't scaled. It's like if only they implement this feature for parallel execution or whatever your favorite thing is, then the price would just moon. Like no, the prices are low because of macro phenomenon. So I think that's maybe the disconnect is in TradFi people like understand this. Like no one's gonna I don't know the exact number. I think Nasdaq is down like 15 or 20%, right, off the top. No one's gonna be like some stock that's like also down 20%, being like, that stock is shit because it's down 20%. Like everyone just understands, like, no, it's the market. So I think that even that basic level of maturity hasn't like made its way into crypto yet. So I'm not worried about the prices because in the near term that stuff just is not super material. What actually matters, what I think is the litmus test of whether Ethereum or or really DeFi in general is going to be successful, is in some number of years, hopefully a low single-digit number of years, there are going to be tens, maybe hundreds of companies that are large enough to be publicly traded entities operating on these smart contract platforms. In other words, generating hundreds of millions of dollars of revenues operating on Ethereum. If that happens, we'll all do great. ETH price will do great. Everything will be fine. If we continue to remain this circular solipsistic Ponzi nonsense ecosystem, then I guess we'll just continue being these relatively small, just hyper speculative asset markets. So to me, this is why what we're working on is what we're working on, which is to say creating something with exogenous revenue streams, getting real customers that are using this stuff in real life, spending money, transacting, commerce. That's the stuff that actually is going to matter. If we can generate hundreds of millions of dollars in revenue from real economic activity, again, exogenous revenue sources, not internal token cycling, but actual use cases, then our token will be fine. We'll be fine. It's not about what happens in the 0.9 correlation to Nasdaq macro-driven stuff. It's, as I said, it's things that we can control. That's what actually matters.
I cannot agree more. And I feel like going around the world and talking to many people that I think a few years ago would laugh when you sell them crypto, are now very interested about stablecoin issuance and real-world asset tokenization, and tokenized funds. Last week, I was surprised to talk to Fidelity and hear that they are planning on issuing this stablecoin, which was just launched yesterday. And Goldman Sachs are probably going to do the same thing that BlackRock are doing right now with tokenized funds very, very soon. So it seems like big institutions are immune to this. I don't know, maybe they are not plugged into crypto Twitter for some reason. And I feel like never before I felt bullish about exactly what you are saying, that we are seeing more and more real businesses, and we are also seeing some of the smartest investors in TradFi, not just investing, but building and really viewing how they are taking part in this. I feel like we just moments ago passed the stage of they fight you, and we are now at the stage of they're not really joining you, they are finding their way of doing stuff with this trusted infrastructure. Now, so many of the conversation I had this past week were with entities that either building on Ethereum or building their own layer 2, and I had quite a few different conversations with very interesting entities that thinking about launching their own L1 and thinking about doing, if it would be real-world asset tokenization or a variety of different things in quite of a separate way. I really wonder where we are, because EtherFi will gain the most from not just ETH price going up, but from this activity being done within our ecosystem. And if we really go back and ask ourselves why we choose this ecosystem, like the first question I asked you was why you choose Ethereum, and your answer was, in short, was it wasn't that hard of a decision. This is really where programmability takes place in the most trusted way. And decentralization is often, trust and decentralization is viewed in different lenses. I feel like it became a word that many of us are kind of immune to. It's being used way too much and used and abused by so many entities. And I do believe that Ethereum is the most decentralized programmable layer, that there is no second best in terms of that. I think that both of us don't agree with Ethereum Foundation on so many things, and like with their operations. But this value of decentralization did not come from there. It's just been upheld in the best way there. We are doing something together that I don't know about any other protocol that is like Etherfi that doing that even thinking in this way, that even looking at its own infrastructure and saying, all right, this is a core component of what we do, which is the issuance of ETH, which is the tracking of the validators and calculating the rewards, something that all of the other LRTs are basically doing in-house. And you have chosen to build with us and do so in a decentralized manner. Maybe you can say a few words on this partnership that we have and why this is valuable for you.
Sure. Yeah, happy to show you guys. Okay, so maybe I don't know how familiar. How many people here know basically how liquid staking works? Okay, well, good. Most people do. All right. Okay, so maybe I'm telling you guys something you basically already know, but essentially the way liquid staking works is let's talking about ETH for the sake of simplicity. You deposit ETH into a smart contract, you get a receipt token for that ETH, and then that set of smart contracts coordinates deploying that ETH to a bunch of node operators that actually stake it. So and then you accrue rewards from staking. So one problem that every liquid staking thing has to solve is figuring out how do you distribute the rewards? How do you know how many rewards you've accrued? And then how do you distribute those rewards to the token holders? So for example, if you have 1 million ETH that's been staked and you've earned 10 ETH in rewards and staking rewards, you first of all need to know, well, how do you know you got 10 ETH in rewards? Because a lot of it happens through MEV, which is basically you send it to a centralized relay and then it ships back some sort of reward to your treasury. You got to figure out how to query the beacon chain for the validator balances. So there's like a lot of stuff, and a lot of it is just like you just call some centralized API, right, to figure out what these balances are. Most, I guess all basically, liquid staking protocols have some little Python script that runs, that queries all these balances, figures out the magic number of rewards, and then perhaps, like in the case of Lido or EtherFi, I don't know if this is true of others, but in the case of Lido or EtherFi, you get like maybe 10 different parties to run the same magic Python script to figure out the balances and distribute the rewards, and then boom, now we call it decentralized because 10 different people ran the same Python script from a GitHub repo that we control, super decentralized. And this is definitely a centralization risk because if somebody gets control of this rebasing mechanism, they could cause some harm. I mean, obviously, I think us and I'm sure Lido has like rate limiting and controls in place so someone couldn't like totally mess up the protocol even if we lost control of this contract. But this is like it's kind of like buried under the rug thing with a lot of with all staking protocols where like there's this huge centralized component to how the rewards are distributed from staking, and nobody likes to to advertise this fact, especially in a, let's say, previous regulatory regime. Like that's like clearly well, I won't say more. I don't want to give people ideas. Okay, so Oracle can totally fix this now because they actually have an Oracle that is supported by restaking, and so people have skin in the game to not play games with this rebasing mechanism and actually make this reward calculation more genuinely decentralized. So that's why it's important. It's a security concern. It's even if Lazarus, the Lazarus group gets control of our of our keys, they still wouldn't be able to rug the protocol because the actual rebasing mechanism is run in a decentralized manner. So So it's an important thing that, as I said, is kind of like in the background, but you don't know that you should worry about it until until something bad happens. And so this will prevent, hopefully, something bad from happening.
I feel like we do hope that nothing bad would happen and we don't expose new attack vectors, but usually we care much more after bad things happening. So I feel like we we have been working with all of the different, not all, but with many of the different LRTs. And I think that this is one of the examples of, at least on my side, I know that you don't really take credit. You said that we are the biggest and it is what it is right now. But I think that there are credits to be given because operating and working with the team at Edify is really feels to us on a different level. And even thinking about these things, this is something that you mentioned to me. This is not something that I remember the conversation of that, and you sent us to the rabbit hole of understanding, okay, how do we build this new type of Oracle? And we're very happy about this partnership. All right, so shifting from shilling to something a little bit more inspiring. I think we have the permissionless nature of the crypto space means that you have different actors. Everyone allowed to build, and if you are shilling hard enough, you also get attention. It's not really about, from the get-go, about what are your motives. It's hard to know motives from the early days. And we are seeing time and time again so many people that choose to not to be good actors and make money in a much faster way. You also tweeted not long ago that you want to be remembered, you want your kids to remember you as one of the good guys. How that's something that influences you on your day-to-day decision making when you wake up and build and deal with pretty much your work and managing so much money?
Yeah, I think that's a great question. I mean, there's so many different bad things about the crypto space, right? So many bad actors. I mean, as you said, that play short-term games, just try to make a bit of money at the expense of everybody else, and then and get away with it. And I think that is the curse of crypto is that you've got these two sides to this universe. On the one side, you have some number of people that are actually trying to build real products that move the ball forward, create real value. And then you've got these like giant casino infernos in the sky in the form of these centralized exchanges that just churn billions of dollars and like flood the crypto space, with capital. And the result of that is the path to liquidity can be very short, right? Like you launch some dumb clone of something, launch a token and cash out, and you can make millions in some cases. And so that becomes like this sort of attractor that a lot of founders get pulled into, and so that leads to basically bad actors crowding out good. And so this is one of the reasons why you made this comment earlier around like, yeah, I guess some tweet that I said where like the market is so bearish that I'm bullish, and that like the bear markets are the best times to actually build because a lot of those bad actors tend to get flushed out because the easy money kind of goes away. So if you're there to focus and build something more for the long term, you can actually do some damage. You can actually make some headway and get it more attention. So I don't know. I mean, I think part of it is just you have to have your own kind of ethical standards of what matters, and that's something that's always been important to me. The other thing, I mean, because I had founded a previous company in the Web 2 space, but as far away from crypto as you can get in B2B SaaS, and so I'm not worried. I don't need to make any more money to live my life. So I'm not worried about this type of short-term stuff. I have the luxury of being able to focus more long-term. So I think that's maybe one of the circumstances that allows me to to take that stuff more seriously.
I definitely wish everyone would have this view in our space. You are here in Israel. You just experienced your second, actually, missile situation, right? The first one was mid-air. You already made a lot of money before, as you just said. What brings you to Israel? What maybe you can share with some of the people here. What's so special about it that you came to the other side of the world?
Yeah, I mean, I think it's another one of those like perceived risk versus real risk. I think maybe some people would have their perceived risk of going to Israel is high, but the reality is, there's like 10 million people here. Your odds of dying in a rocket attack are very low. You're probably, I think someone made the joke that you have a much bigger risk of getting hit by a scooter than a rocket. So I don't think there's a real risk here, which is why when I flew here, before we were about to land, it was right as I guess Monday's Houthi rocket was on its way, and we actually saw it taken down from the plane. And my reaction to that was like, wow, that's so cool. Which I think maybe says
That's the right
something.
reaction to have. That's the right reaction to have.
I think
It's the Israeli reaction usually.
Yeah, maybe maybe going back to my roots, but most normal people probably would not. My wife did not have that reaction. I'll say that. But anyway, so I don't think there was any serious risk. And I mean, I think the startup ecosystem and including the crypto ecosystem in Israel is really remarkable. I mean, I don't think there's anything like it anywhere in the world. And this sort of like just density of talent and quality of talent just kind of doesn't exist anywhere. I mean, really, the only place that I've gotten a similar vibe is the Bay Area. There's the same kind of just concentration of brain power and ambition and just crazy people being willing to do stuff. So it's really unique. There's places that kind of are like have like echoes of that. Like New York has some of that, but as I said, like nothing comes close. So it's really cool.
I'm happy to hear that. So, with that, I assume that people here don't know, but you actually grew up in Israel in your early years. Honestly, I lived in California for most of my adult life, and I came back to Israel 2 years ago, and I'm still amazed. The people that you get to work with, I would not change building in Israel. Honestly, things are moving so much faster. Israelis are willing to work so much harder and really enjoy it versus American experience. I know that you brought so many people on your team to work in office with you, which is quite rare. I'm extremely bullish on companies that do that and on teams that are committed to change where they are living, to actually commit to a mission. I feel like you move in a completely different pace. And with that, I want to thank you.
You want to open the floor for questions? Yeah. All right. So who has a question to this great team? Okay. I can ask the first question. That's okay. I guess, how does it feel like to be the fourth largest, you said right now in TVL? And what are you thinking? How I want to be number one or how I beat number three?
Our North Star, whatever you want to call it, is we want to have a credible path to $1 billion in revenue. That's actually what matters. So the TVL that we have today, it's almost a rounding error to what I think we need to get to. We need to get to hundreds of billions of TVL. I think, if you look at the TVL today of like all of DeFi, I don't even think we've hit the all-time high that we hit in the past cycle. I mean, it's just like I said earlier, it's just we're recycling the same shit. It's the same capital tokens floating around, driven by the speculative market around ETH and BTC. So just it's not interesting. It's small. It's very small. It's a rounding error to what actually matters. We need to build real businesses that are doing at least hundreds of millions, eventually billions of dollars in revenue. We keep talking and getting excited about TradFi launching some ETF that brings some TradFi money into crypto. When we'll know we're winning is when TradFi is almost like an afterthought, when everything new and interesting just gets launched crypto native first. All the most important assets just get launched in crypto, and then TradFi is almost like, okay, the boomers are going to keep some of their money there, so we need to make a connector. So the short answer is, like, sure, great, we've had some success, going from 0 to 1, but it's not interesting. Like, we need to literally be 100x from where we are today.
Nice. So I'm going to ask the second question because none of you have the balls to ask it. You want me to ask it? All right, there you go. There you go. Love your hair again.
I got a little bit late. Yeah, I'm sorry. I got a little bit late to the lecture, so maybe it's a redundant question. But do you see on the horizon of the roadmap for EtherFi, do you see RWAs or any kind of tokenized securities or bonds or whatever? Do you see it on the horizon of EtherFi? Thank you.
Yeah, 100%.
I swear to God, Dean, I swear to God that was my question. Okay? I swear to God. I was in Brazil last week, Mike. I'm going to prompt myself. I was in Brazil last week, and I was at Mercado Bitcoin. By the way, I don't know in Brazil, if you know this, they don't say Bitcoin, they say Mercado Bitcoin. And then when we asked them, what are your top assets on your exchange? They said, of course, Bitcoin. So my friend who's American asked, what is this asset, Beachcoin? Is that related to one of your beaches? And I'm like, Adam, you gringo, it's Bitcoin. That's how they say it. Anyway, so they have at Mercado Bitcoin, which is the largest exchange in Brazil, they have fixed income assets that they offer, right, that they've tokenized. I know that you guys have liquidity pools. Where do you see that get connected? Do you see that in the future? Which is the same thing Dean asked, but I made it sound with a joke. You see what I did with all the story? All right, there you go.
Great. No, that was awesome. Yeah, so 100% for sure. So what we just maybe to go back in case you weren't here for it. What we have, our goal is to create a crypto native neobank. Today, what that consists of is 3 products: EtherFi Stake, EtherFi Liquid, and EtherFi Cash. Stake is this staking product. You can think of it analogous to a savings account. EtherFi Liquid is our investment product. It's like a robo-advisor for DeFi. And 100%, we want to be able to offer RWAs, treasuries, tokenized stocks. I mean, anything that people want to deploy capital into, we want to be able to offer that to users so that you have a nice, one integrated app that you can control all your finances in, but have custody of your assets and pay a fraction in fees that you would pay in a traditional banking institution.
I'm giving you another chance. Okay, listen. So my question is, you're a founder and the CEO of EtherFi. How many people are in EtherFi right now?
25.
25. Well, okay, that's. I thought you guys have probably like 100. Okay, amazing. So
Well, if we were a TradFi institution with $6 billion in assets, we'd probably have 250 people.
Yeah.
Like we'd be a top 200 bank in the U.S. So yeah, this is the power. We don't need to fleece our users. We don't need to charge them a 2% deposit fee or whatever that, let's say, some cards charge.
Yeah, but someone might say, yeah, that's because you don't have the compliance departments that we have as financial institutions. And
Partly that's true because we don't we don't hold people's assets. We're not a deposit taking institution. We're not a real bank. So that's part of the reason why we can not have a lot of that bullshit overhead that.
Yes,
banks
but
do.
is that a challenge for you then to actually receive funds from financial institutions because they don't see you as such, and then it's hard for them to give you $500 million to put into your pools?
I think there's an adoption curve. Even if we did, regardless of what we did, it'll be a decade before the big TradFi guys start becoming degens on chain. I think it will happen, but it's going to be a while, right? Like if you look at what a lot of TradFi institutions invest in, there's 7 layers removed from the guy running the high frequency trading thing, and front-running users. So the same stuff happens. It's just it's been packaged up and professionalized, and I think we'll get there with crypto. It's going to take time. Our current target customer right now today is crypto native high net worth. There's a couple 100,000 users in DeFi that matter in terms of size. Those are the ones that we're going after. The next circle around that is people who invest in crypto but are not on DeFi. And this is why we want to package it up and make it so easy that people that are comfortable in crypto can deploy capital. And then, and that will get us to 5 million users, maybe something like that, because there's about 50 to 100 million AUM of those types of crypto monthly active MAUs. And then after that, we'll go after the normies and the TradFi and whatever. But there's a roadmap here, and you really can't skip that step. You need to start with this core fanatic user base and then expand outward. If you try to build something that solves for the problem like the grandmother in LATAM is having today, you're just going to fail because it's not the right market for us now.
It's interesting because that's a lot of pitches, right? A lot of companies come with a deck.
They're all going to die, yeah.
Because they're skipping steps.
Sad.
Okay, that's good point. You have another shot. I can do this forever. All right, I'm going to continue. I have one more. All right, I have one more question. It's actually 3. But I would assume 25 people, you're a decentralized company? Everyone's remote?
No.
Oh, you
no,
said
everyone
everyone is in the office. Yes, you said that.
You're
I
not
listen.
listening to the
I listen.
questions.
I'm sorry. This is what you admire him for. You like this culture. I've listened to the whole thing. So, okay, 25 people. You deal day in, day out with assets on chain that eventually secure billions. I'm sure that because of your 25 people, you're probably using a lot of third-party tools. What happened with Bybit and Safe, did that make you ask your team to do something different from a security aspect?
Yeah, we revamped our whole... I mean, we were already doing a lot of stuff. We have this... we have what we call the 3-check process, and it's like a huge checklist. Anytime we do on-chain transactions, we were already pretty paranoid, but we now upgraded to the 4-check process, where there's a multi-step process with offline machines and everybody being in person. So it's we got even more paranoid, and it is kind of absurd that we have to do this. Like there should be tools that require you not to have to generate hex codes and verify it almost on paper. So yeah, it's we got even more paranoid about what we do, but it's ridiculous. Someone should build something that fixes this.
You hear that? Someone should build something.
Maybe
I heard this company Fireblocks.
Yeah,
maybe you guys have heard of it.
Maybe they should build some security stuff. But Matan, did the Bybit incident change anything for you guys or the companies you work with?
Well, we are not in managing asset on-chain business, so it's a bit different for us. But thinking about security, we see ourselves in a way as a security company, not just as a data company. When you think about oracles, the main thing you care about is not being manipulated, not being hacked, keeping the value that you have according to the rules, terms, and conditions that you define, no matter if you're a protocol like EtherFi or if you're a lending market or a stablecoin. The main thing protocols care about are really being secure. So we think about security all day long, and this is really what we are also following incidents in real time. Like we were at Denver 2 weeks ago, and we had the client. Like it wasn't our client back then, and I'm not going to mention their name as a protocol, but we tried to get them as a client, and they didn't join us for quite a while, and they got hacked a day before, like for a small market.
Before Denver.
Before Denver, a night before Denver, and we noticed that, and we came to them and we told them, and they were like very impressed by the fact that they're not even our clients, and we monitor their contracts. This hack was not out there, and it's still not out there publicized, but I feel like we have to think like that, and we have to monitor everything that's happening in real time in order to be better than any other competitor that's mainly focused on just the price of things.
Yeah, I agree. And that's why Fireblocks hires 45 security professionals to keep everyone safe. Thank you, Matan. Thank you, Mike, for a great panel.
Thank you. Thank you, Mike.
Thank you.
Building Blocks 2025 in Tel Aviv.